Hello everyone and welcome to today's video. We have a really interesting topic to discuss today, which is whether negative working capital is good or bad. So this is a very common question which are asked in interviews, and I thought that a video on this should be made because what we are reading in the textbooks and what is practically happening is a different picture. And like if we are reading in the textbooks that we should have a positive working capital, we should have a current ratio of 2:1. That is an ideal scenario, but in actual real life, that is not happening. So to understand it, let us take an example where there are two companies, company A and company B, and for the sake of simplicity, understand that both the companies have the same turnover, same operating profit margin, and in almost every aspect, it is same. If we see the financial extracts of Company A has a trade payable of 100 crores and the current assets of 70 crores, which is compromising of debtors, inventory, bank balance. Similarly, Company B has 100 crores and current assets of 130 crores, in with having debtors, inventory, and bank balance. Like from an ideal scenario or from a textbook definition or textbook understanding, we will say that company B is better in because from a working capital perspective because it is a having a positive working capital. But actually, if we see in real life, company A is better having a negative working capital because what is happening? Like you are buying goods in credit, you are having a higher credit terms with the vendor, and then you are selling goods more on cash basis, or the credit which you are allowing to the debtors are relatively smaller than the credits which you are allowing to the creditors, and you are quickly generating cash here. Your inventories are very well managed and you have to prepare keep a very low level of inventory, and again bank balance, there is not much balance. So companies or investors or owners try to make have a scenario like a scenario of a negative working capital, because in that case they are able to leverage the funds which are provided, or the credit terms which are provided by the creditor. So if you are getting question in the interview that whether negative working capital is good or bad, you need to say that negative working capital is good, provided it is because of leveraging better credit terms with the creditor, and in managing the inventory really well, and having a quick realization of debtors. So, and also remember, if we see from the cash flow from operations perspective also, if we are having higher working capital, our cash flow from operations will come down, right? And if you have a lower, because if the debtors increases from 50 to 100 crores, so it will have a negative impact in the cash flow from operation because 50 crores we did not realize. So from a cash flow from operation perspective also, a company which is having a negative working capital are said to be better compared to a company which is having a positive working capital. And do you know, like you might also get scenarios or situations like, or which are the companies which should ideally have a negative working capital. So a very good example for this would be companies like which are in the hotel industry, suppose, or restaurant business. So in restaurant, what happens? We are purchasing, we are buying groceries and all for the business, and we will might have a credit period of 30 days, like we bought whatever ingredients are required for making the food. And then whenever a person is going to the restaurant, it is almost paying the restaurant in cash, right? So in these industries, the working capital will should ideally be negative. If it is having a positive, then it is from an investor's point of view, it is not showing a good sign. This shows that the company is not able to manage its working capital well. The debtors are delaying their payment, which is not a good sign. Second scenario can be in the similarly in the case of retail industries, like suppose Spencer. It is taking goods in credit. It is having a 30 days, 40 days, 50 days credit period, and we consumers are going buying and paying the company directly in cash. So such companies also should have a negative working capital, and I will show you that because this is also a question which you can get. Like which are the industries which you find, or which are the companies? Tell me some companies which are having a negative working capital. So if you see the site like annual report, so this is the annual report of Spencer's basically. I have just opened the annual report. You can download the annual report and see. So if you see the current ratio, yeah, current ratio, it's 0.51. So Spencer is an industry where the current ratio is negative, means like current ratio is point below 1. Similarly, if you see Barbecue Nation, I was just checking, Barbecue Nation also has a current ratio of 0.78, which is below 1. And investors, and if their current ratios goes above 1, then investors will not be happy, because what does this scenario explain? Like, if you are having a trade tables, if you are having a debtors of this amount, then whatever is the excess cash coming to the business, like from the profits and all, companies are investing in the long term prospects of the business, right? So if a company which should have a negative working capital is having a positive working capital, it is like it is not able to manage really well, and it is not able to invest in the growth of the organization. And one more industry I will show you, which is having a negative working capital, is Bharti Airtel. If you see the current ratio, it is again 0.51, because as you know that most of the payments we do it in advance in such kind of industries, and the industry can use the leverage the credit terms with their vendors, and will have a positive negative working capital, and will be able to more invest into the growth of the organization. I hope now you're able to understand why companies are focusing more on increasing their credit terms with the creditors, and decreasing the credit terms which are given to the debtors, and also having a reasonable level of inventory. Also, there is a pro tip to you, that please make sure that whenever you're going for an interview, do check the working capital of the organization, do check the current ratio, because it may help you in answering few questions relating to those topics. Also, I will request you to write down 3 more companies in the comment section which are having a negative working capital. I'm pretty sure you will research on the same and identify few companies. And please do like, share, subscribe the channel, and thank you for watching this.